Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 23rd, 2025, and we're diving into Otis's first quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Otis, a leader in the elevator and escalator industry, has just released its Q1 2025 earnings report, and there's a lot to unpack, from their service sales growth to their strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Otis reported net sales of $3.3 billion for the first quarter, which is a 3% decrease compared to last year. John, can you elaborate on this?
Absolutely. The decline in net sales was primarily driven by a decrease in new equipment sales, particularly in China. However, it's important to note that organic sales remained flat, indicating stability in their core operations. Despite the drop in GAAP EPS by 29% to 61 cents, the adjusted EPS rose by 5% to 92, showcasing strong operational performance and effective cost management.
Service segment performance. Otis's service segment seems to be a bright spot. What are the key highlights here?
The service segment indeed performed well, with net sales increasing by 1% and organic sales growing by 4%. The operating profit margin expanded by 40 basis points to 24.6%, driven by higher volume, favorable pricing, and productivity improvements. This segment's resilience is crucial for Otis's overall performance.
New equipment challenges. On the flip side, the new equipment segment faced some challenges. Can you tell us more about that?
Yes, the new equipment segment saw a 9% decline in sales, with a 7% drop in organic sales. This was largely due to a significant decline in China and the Americas. However, the segment managed to improve its operating profit margin by 20 basis points to 5.7%, thanks to productivity gains and commodity tailwinds.
Cash flow and shareholder returns. Let's talk about cash flow and shareholder returns. How did Otis perform in this area?
Otis generated $190 million in GAAP cash flow from operations and $186 million in adjusted free cash flow. They also returned approximately $250 million to shareholders through share repurchases. This demonstrates their strong cash generation capabilities and commitment to shareholder value.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 91 cents for this quarter. How did Otis's actual performance compare?
Otis slightly exceeded expectations with an adjusted EPS of 92 cents compared to the forecasted 91 cents. This outperformance, albeit modest, reflects their effective cost management and operational efficiencies, which help them navigate the challenging market conditions.
Future outlook and strategic initiatives. Looking ahead, what is Otis's outlook for the rest of the year?
Otis has revised its full-year outlook, projecting net sales between $14.6 and $14.8 billion, with organic sales growth of 2% to 4%. They also expect adjusted EPS to be in the range of $4 to $4.10. Additionally, they've announced a dividend increase for the fifth consecutive year, reflecting their confidence in sustained growth and shareholder value creation.
Key takeaways. In summary, Otis has shown resilience in its service segment and managed to slightly beat EPS expectations. Their strategic focus on modernization and service growth, coupled with a strong cash flow position, bodes well for the future. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Otis's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Otis's performance in the comments below.